Good evening, traders. It's 9 p.m. on Sunday here in the UK, and I've actually spent quite a lot of time refining my charts this week, and I've been seeing some really interesting things going on in the market, and I've actually got some really great analysis to show you guys. I found some really interesting things for you guys to take into consideration when trading in the coming weeks and even in the coming months. So I am going to be starting on the higher time frame, looking at the longer perspective on what's been going on throughout the year. Obviously, as we now approach the end of 2018, it is quite a significant time in the market. Coming into 2019, we'll have a better idea of what the markets might be looking like and where they might be heading. So to start off, we're on the dollar index, and we're on the monthly time frame here. So as you can see, we were in this bearish leg, and this downward leg did take out the lows here. So following this significant bull run that we had for the dollar, we saw now this first push to the downside, and this could actually prove to be quite significant, because although this year we have been trending up, we could actually be forming a lower high here to then head further downside. Having said that, we are above these moving averages which have crossed over to the upside, but as I say, this is on the monthly time frame. So if you take that down to the weekly, you can see we had a little bit of consolidation at the start of the year, but as we approached the middle of the year, price did actually take off with some momentum. Then throughout summer, we saw price stall slightly around this 94-95 region, but overall we have continued upside for the dollar. We had this retracement here in August/September, which was the first real retracement. However, we did then continue, but you can now see that we are hesitating slightly at this region. We've had 1, 2, 3 weeks that have pulled back from this 97.5, and if we take a look at this on the daily, we can see that we've now got this ascending wedge, this ascending triangle, sorry. So you can see this is last week's pullback that we saw on Friday that just rejected that level. We may now see further consolidation within this region, potentially a break to then head towards that 96 major support level. Overall, as I say, on the monthly time frame, we could be seeing something quite significant in terms of downside for the dollar. Obviously, that 96 level is the first major target. We may see some further consolidation between these two key levels before then seeing a push downside. Alternatively, a break through this 98 region could be quite significant in terms of seeing upside towards that 100 level. And if we take a look back to 2008/2009, so the previous financial crisis, we did actually see the dollar take off, and that's due to its status that's due to its role as the world reserve currency. So it is considered as a safe haven. Everyone flocks to the dollar. So while US equities and real estate may not have been doing too well, the dollar itself did actually appreciate in value, and that's not something that a lot of people really understand. So if we saw something like that again, we could actually see the dollar find strength here and then take off. However, as many experts have said, many economists have predicted, that this time could be slightly different. And to be honest, I tend to agree with that. We may not see the dollar crash and die essentially, but it may not be quite the same as this bullish leg here. But anyway, onto the individual currency pairs. So Australian dollar. Although I'm talking about the dollar reversing long term here, or into 2019 I should say, the Australian dollar is one that I'm actually looking at performing less well than the US dollar. So as you can see, last week we had this massive bearish engulfing candle which engulfed the majority of the past 3 weeks price action, you could say even the majority of the past 4 weeks, and has brought price back below this 0.7250 weekly support, which is now turned to resistance. We're also back below the moving averages. Sorry, this wasn't last week, 2 weeks ago. Last week we did come back up and retest that 0.7250 and have now pulled back to reject it. Closed as a spinning top, which does suggest indecision. However, after this big bearish candle, I would expect to see further downside. So there's potential to see price come back up towards that 0.7250 once more. However, as I say, looking at downside here. And as you can see, we had that break last week of the trend line. We had the retest, sorry, of the trend line in line with the moving averages and that 0.7250 level there. I was waiting for this to get an entry on this pair, and on Friday the market just melted down towards my initial target at 0.7150. We have pulled back slightly from that level, and we may now be seeing price pop slightly higher before then falling lower. From here, I'm not too sure if we may be seeing price come as high as 0.7250, but we may well see price come up towards 0.72 100, 0.72 200, or 0.7220 I should say. If I take it down to the lower time frames, 4-hour time frame, you can see this much more clearly. You can see that we had this range. Within this range we had our counter trend line, which price broke, moving averages crossed over, momentum caused price to break through the bottom of the range, and we're now retesting that range after finding a small amount of support on 0.7150. So while price does appear to be hesitating at a retest of the range, and we could see downside from here, we may also see just a push slightly higher back towards this 0.7200 level before then falling towards 0.7125 in line with the breakout targets from that range. And if we do take a look at the long-term perspective, we have a look on the daily time frame here and take this long-term fib, then you can actually see that price dipped into that 60 that refined Fibonacci zone last week, obviously then pulled out of that zone, but our 4-hour range breakout target still remains within that zone, and I do think that we may see price pull back within that region for some further consolidation before making another attempt at the upside move. So overall, looking at 0.7125. Now if we take a look at Usdjpy, and I do find that this pair moves largely based on the dollar, so if I'm looking at the dollar weakening, then it's likely that Usdjpy will weaken also. And if we do take a look at what we're seeing here, we are in a downtrend overall. I mean, on the monthly time frame here, we do see price struggling around this 114 monthly resistance region. So despite being above moving averages, which have crossed over, I've said time and time again about the significance of this level. Price hasn't actually spent a lot of time above this region in the past 10 years. So we could actually be seeing the market turn from this point. We've seen 1, 2, 3 months recently, and then earlier, last year, price was struggling at this region. So I wouldn't be surprised to see price roll over here. On the weekly time frame, you can actually see that we've seen price make a new low with this move here, come back up, back to this 114, and now we could be seeing price roll over here to then push even lower and make yet another low. So what we've actually got here is a double top formation here from late in 2017 to now 2018. Whilst the moving averages just support price action, then we are the market is being pushed towards that 114 level, ready to roll over to the downside. And here on the weekly time frame, what you can actually see is discretely lower highs. So we've got a high here, lower high, and another lower high. Although the market has been in this uptrend overall and making higher lows, since the past couple of months, we've actually started to turn downside now, and the past 2 weeks have formed lower lows to that previous discrete higher low. So if we take a look at the dynamics and the actual price action in this current leg, we have seen at the beginning of the leg earlier this year, we saw quite strong momentum, didn't have any bearish candles. This one doji formed here, but overall very strong push towards the upside above the moving averages. Then we did start to see some bears enter the market here. Price hesitated, but overall continued to push higher. Pulled back slightly again after reaching this 112 level, and then we saw that final push higher towards the 114. Now what we're seeing is finally price is starting to essentially turn towards the downside. We're seeing further consolidation. We haven't seen price action like this yet within this uptrend. So increasingly more bearish here as the market starts to essentially bend towards the downside. We should see the moving averages begin to converge, and then potentially see a break of this uptrend. Obviously, overall, we did have bullish price action last week. We had that tweezer bottom, which, although we did break through that previous low, failed to sustain at that level. So then price did come back up, but then failed to break past the prior week's open. So while last week was bullish, we did pull back and are hesitating at that upside move. And what we could do, we could consider this an inside bar. If we took something like that and then took a look at that on the daily time frame, you can see that we are in somewhat of a range. So you can take this as the 112.50 daily support level, which I've recently put in there. You can see how nicely price is responding to this level. And then just around the 113.75. So I've left this 113 level in just to show you guys what we did have. But so as not to confuse you, I'm going to delete that level right now. And you can see how well price is consolidating within this region right now. We do have this ascending wedge, where last week we had that test of the level, which formed that inside bar formation, and now we're looking towards the top of this range around a test of the downtrend and the 114 major resistance. I'm just going to delete that now. But as we sit on top of the moving averages, we could be seeing price push slightly higher. However, as I say, we have had this lower high, and now this could be final lower high. So while we watch price around this moving average support, we could see price come to test this 112.50 once more, in line with this uptrend. Taking that down to the 4-hour time frame, you can see we had that final push upside last week, but this was in fact within the refined zone of a downside fib. So we did have, to take it back to the daily time frame, could consider something like this as our fib, which would have price playing around with that refined zone. However, more short term, would take this, which would see last week's final push upside rejecting that 78.6 level, and we did have a double top formation here. And if we look along this level, I'm just going to draw that in for you guys. We do have a zone around this 113.75 region, which does look like quite a good region for reversals, to be honest. And as you can see, that second to last candle on Friday, we had that big bearish engulfing from that region, which took price back below the moving averages and caused price to spike through that uptrend, which I've now got as a counter trend here on the 4-hour time frame. So we did have that hammer formed with the last candle, and we are still within that uptrend, so it is possible to see price come back up to this 113.50 and potentially even back towards the top of this refined zone. But overall, I am looking at downside from this region. So potentially the 113.50 to then make way down to 112.50. So a nice 100 pips should be in for this week. Looking for that moving average crossover in line with a break of that uptrend line. But we're looking to the middle of the week to see that move come to light. As I say, the long term could be seeing further consolidation on this pair, but as you can see, that's quite a large range, and that 112.50 level that I've just had in there does look like quite a nice target region. So onto Usdcad, and you'll remember that we had this supply zone drawn in here. Price looked like it wanted to break above this once more last week, but then we've just retraced and found its way back within that zone. Here on Usdcad, if I zoom out here, you can see that after this extended upside leg, we had a big push towards the downside, consolidation here, and then a new push to form new lows. Now what we've been seeing for the majority of 2018, off the back end of 2017, is essentially what we saw here, which is that consolidation. Now as price struggles at this level, we could be seeing another leg to the downside, which would see new lows. So we could actually see a big bearish push now down towards these regions here. Obviously we'll be looking at the previous lows around 1.2 as our initial targets, but that is more long term. If we do break above this region, obviously we're looking immediately at the 1.3500, and then we could actually be seeing price reject that setup and that scenario and break these prior highs here for an overall reversal. But overall, as I say, I am bearish in the long term. So despite being in this overall upward leg, we are seeing price hesitate at this region, and normally I don't draw counter trend lines on the daily time frame. However, as you can see here, we had this push towards the upside and the spike through this crucial zone. Following this, bearish price action sent price all the way back down to the 1.3250 support level. We've had a new high, then a higher low, and then price has come back to test that trend line. So we are seeing, although they are quite discrete, at the same time they are quite clear as well. We are seeing quite large swings here: high, low, high, low, high. And now, as the third touch of this trend line, we could be seeing the market turn downside at least to the 1.3250. I've mentioned previously that we may see some consolidation within this region for some time, depending on how the price of oil shapes up, and obviously the US economy. But for now, as we remain within this zone and below this downtrend, I am looking at further downside. You see this better on the 4-hour time frame. And whilst price is just resting on the moving average support and is currently bearish to an extent, we may just see one further attempt at this trend line before heading downside. In terms of an upside Fibonacci, obviously we can't forget that we are in an overall uptrend. Price did come within that refined zone, rejected that, but as price struggles on this counter trend, I do expect, and I have mentioned this previously, I do expect price to return to this zone. So that 1.3250 level, as just mentioned, does look like a really nice target for price. Having said that, we do have the Fibonacci extension just past the 1.3500 major resistance level. So either or, I don't really see, I think it's a bit optimistic to see this market reach that level, especially in the near term. We would have to see very cheap oil prices, which isn't a massive stretch. It's definitely possible, but for me, we'll either see price come up towards this region here around 1.3450, but as I say, my bias is to see price fall towards that 1.3250 level and then potentially see some further consolidation, as just mentioned. Now finally, onto Gbpusd. And this is quite an interesting one because although I'm talking about dollar weakness, the pound has had quite a crazy ride this year. And I mean, well, pretty much for the past few years, as you can see here. We had that nice uptrend for 2017 coming into 2018, but then this year has been pretty catastrophic for the pound with ongoing Brexit negotiations, as we all know. In terms of a trend line, you could have something that looked a bit like this. However, for me, that is a little bit steep. Not the best of trend lines, don't really like that. But what I do want to just point out is this region down here, this 1.2 level. I have mentioned that the pound can fall a lot lower. However, after doing my analysis this weekend and taking a deeper look into the market, I don't actually think we will see the price see this market fall past this level. It does look like price has made quite a nice bottom here. Has made quite a nice go of testing this region, and now I think that there is actually potential to see this market kind of change sentiment and look towards the upside. I'm not saying that we're completely finished for downside moves here, but we just have to watch out for reversals around this 1.25 region, and then around the 1.2 and 1.2250. So take a more detailed look. We saw a big drop in price, 250 pips last week, but then we pulled back from that 1.25 level. On the daily time frame, you can see how sharply we pulled up from that region, which took price to retest the moving average resistance zone before then falling again. So we do have that that lower high there, looking for price to then head back down towards that 1.25. So I can see that coming to light. 1.25. I did mention that last week that I do see the market returning to that level. I'm not sure how much further price can go past that level. I mean, in terms of a fib, could see something like that. However, as I say, so that would see price down at the 1.2200 with 38.2% level lining up nicely with that 1.2750. Is potential along with the overall downtrend. However, not really for me. What we can see on this time frame is this daily downtrend, which does line a retest of this trend, does line up quite nicely with that 1.3 major psychological level. So from my perspective, what I can see is price finding support on this 1.2500, taking off all the way back towards this trend line, pulling back towards this 1.2750 support, and then potentially taking off much higher towards 1.3500 and beyond. And if we do take a look at that, that does line up quite nicely coming into 2019, the start of 2019, which is when Brexit negotiations are supposed to be coming to an end. So we're looking at potentially the end of this year, start of next year, that we have that highly anticipated vote in Parliament on the Brexit deal, which obviously would line up nicely with this bullish move, and then coming into the middle of 2019, it is when Brexit is supposed to essentially come to an end, and the UK is supposed to leave the EU. So while that is going to have a great effect on the markets, the market will be looking to largely price that in. So this is why we would see price take off before March. March 29th would be the date. So we would be seeing the market turn upside considerable amount of time prior to that date. So any form of good news, as we know at the moment, causes a lot of volatility, just like bad news. However, I don't think rejecting the deal outright is necessarily the best option for the UK right now. I think MPs do realise how catastrophic it could be for the UK economy and for the pound. Central bankers and many politicians, economists, already having come out and warned of a no-deal Brexit. So I don't think anyone actually wants that scenario. So this does lead me to think the 12500 level could hold up quite well. Take a look on the 4-hour time frame. We can see that the moving averages are trying to cross over to the downside. We had that high formed the end of last week on Friday. And then now, as we come to test that moving average, I do believe we'll move back to that 1.2500 level. In terms of a Fibonacci, you'd be looking something like that. You can see how nicely price responded to that refined zone, as now we move back to that 0%. So yeah, overall looking for reversals around this region, potentially some consolidation as volatility decreases around the Christmas holidays, before then breaking out towards the upside. But as always guys, I'll keep you updated. Sorry if it's been a long one, but hopefully you've all got loads of information to take with you to the charts this week, and lots of things to consider in the market moving forward. Anything else, don't hesitate to ask us questions, drop a comment on the website, DM us on social media, or send us an email, contact@insidefx.co.uk. But I'll be back midweek for your midweek breakdown guys. But other than that, have a great week in the markets.